Hello friends, this is Saurabh Wadhwa from Tax Accountant. Today I'd like to cover a video on credit cards. So credit card could be your friend, could be your enemy. What is this according to you? Is it your friend or is this your enemy? According to me, it was my enemy. For the time I was starting up my career and I was wanted to go ahead in life, I was going backwards due to having credit cards. So in my 10 years, from my year 20 to year 30, so those 10 years, that credit card always pulled me back, and I paid thousands of dollars interest. Unknowingly, I kept paying, and it was too late and it was damaging for me, and it did set me back. And then later on, I realized that this is my enemy, this is not my friend, and I had to come out of the trap. So today I like to show you the live examples and see why this is your enemy and why you should not use it. There might be some cases that you may need to use the credit cards, but this is all my experience I want to share with you. So credit card, how the trap begins, I'll show you. So how the trap actually begins, you start spending small amounts to earn the rewards. So you go to BP fuel station or any shopping and things, you think, oh, rewards gonna come, incentives gonna come, keep spending the money. So let's say your bill come out to be $2,000 and this is your bill, and you get 55 days to pay off that bill. You may or may not be able to pay that month. Okay, first month you may be able to pay, you will pay that off in full. Second month the bill again comes, you may be able to pay or may not. Third month it's going up above your budget because you have been spending money which is not available to you, and you get incentive. Remember one thing, there is incentive to spend that money. You spend that money again, you might not be able to pay. So what happens, this is how the trap begins. So interest rates are generally 22.95%. So if I have to show you an example, let's say $2,000 is your bill, out of which you do not have $2,000 to pay. You only have $1,800 and you paid $1,800. So balance left is $200. Ideally, they should be charging you interest on $200. No, they will charge you interest on the whole $2,000. This is how the trap begins. So they will charge you 22.95% on that because you have not paid the bill in full. Next month, of course, your carried forward balance is only $200. This is your opening balance of next month. But you haven't stopped using the credit card. You will incur another $2,000 on top of it because your regular expenses are there. So now your bill work out to be $2,200. This month, because last month you could only pay $1,800, no way you can pay more than that because this is your budget. You're only going to pay $1,800 from there. Balance left is $400, and they'll charge you interest 22.95% on the whole $2,200. See how the trap begins. Each month your deficit of 200, now your deficit of 400, you paid interest on 2,000, now you paid interest on 2,200. It's going to keep accumulating, and after 1 year, what's going to happen? Each month you are $200 short. The whole year you will be $6,000 short, right? Roughly. Now and let's say your balance is $6,000 for the year statement that comes out to you. Now what's likely to happen, you will say, okay, let's shift my credit card to another company, another bank, and another bank will offer you 6 months interest free on transfer balance, or 6 month only 7.95% on the transfer balance. So you might get 6 months deferral just because you have shifted the bank, but only 6 months deferral. After that, the trap begins again and again. It's very hard to come out of that trap. It has happened with me. It has happened with very close family members, so I understand how the trap is and how you should come out of that. And according to me, the only way you can come out of the trap is when you take a scissor and you cut the credit card. There is no other way of coming out. And then you have to start using the debit card. So that's what I think the smarter approach is. So smarter approach would be you do not use the credit card. So this is what I do now. I cut all credit card except one. So I'm still using one credit card. I'm not selling that credit card to you. Okay, so you can use any credit card. I personally use American Express. The reason being, it's not being widely accepted by anyone. So there is no incentive for me to use that credit card on my daily things. But I do still need credit card for my international travel, for hotel booking, for rental cars and things, because there is a requirement for you to have a credit card. They deny having the debit card, so you actually do need it for certain things. So for that, I only use that card, which is not acceptable anyway, so I don't use it on my daily things. But wherever it's used, I do get some points from there. Again, I hardly use it, to be honest with that. Debit card is the most card I use all the time, and this is how I have structured my things around that. So when credit cards are justified, I think credit cards are justified when you're using it for things where you have to use it, such as I said, hotel booking, international travel. Some of those international travel, you get free travel insurance on there as well. So it could be your friend if you know how to use it. But for first 3 years, I did not even use any credit card, so that I get used to use a debit card. So if you are in that trap, I strongly recommend do not use it at least for a few years, any credit card. After a few years, once you got used to it, how to use it, how to use the card, how to spend your expenditure, how to plan your budget, what is your budget, and all those. Once you understand everything very well, then only come to credit card, only for certain things where debit card is not acceptable. And final piece of advice from me: credit cards are not your friend, they are your financial enemy. They're taking you backwards, they're not taking you forward. So more credit cards you have, less likely for you to get any loans for home loans or any other business loans, because they look at it as a risk. Even though you're not using it, that credit is always available for you to use it, and you may get tempted to use it just because it's available. If there is a family emergency, someone need it, you might be inclined to use your credit card and give it to them. So it is your financial enemy. If you look at from that credit is always available at a very high interest rate. And use debit cards wherever you can. So debit card would be your a go-to card, which you use it all the time. And final thing, you use the credit card if it's absolutely necessary. This is just my view. What are your views? You can share in the comments, or if you learn something from it, please share this video, subscribe to this channel. Thank you for watching this.